Hi to everyone. In this video, I will talk about funding rates. It's one of the most important mechanisms in perpetuals. Perpetuals are just like typical futures contracts from financial markets. The only difference, not the only, but the most important difference being that they don't have expiry date like an ordinary futures contract. That's why their name is perpetuals. Since they don't have an expiry date, exchange should have a mechanism to control their prices because there is a possibility that they will deviate from underlying spot markets forever. So funding rates are a mechanism that do exactly this. They are designed to do this. So when a perpetual contract, let's say Bitcoin USDT perpetual contract is trading at a higher price than Bitcoin itself, than the underlying market, so the funding rate will be positive, which means long players will pay to short traders, and this will incentivize to go short, which will balance the market. If Bitcoin is in downtrend, conversely, then funding rate will be negative, and short traders will pay to long traders, which will balance the market. So there are actually many trading strategies built around funding rates. Let's get funding rate data from Binance, the largest centralized exchange, and visualize some data, and also see if we can build anything meaningful. First, we import libraries. Then we fetch funding data. It's in the Excel file in my device. Now we can visualize. Let's first look at funding data and see how it looks like. This is, you see there are many, more than 300 perpetuals, and this is their funding rates. Now we can select, for example, BTC USDT perpetual, and see and visualize its historical funding rate. Let's do this. Yeah, as you see, mostly Bitcoin funding rate was positive historically. There was significant uh, positive rates at the end of my trading data period, which is early 2021. There was also, I think it is FTX collapse. Yeah, it did at this period when there was a sharp down move, and now we are here. It moves around zero. We can also look at, let's say, Solana, Sol USDT, and visualize it as well. Yeah, you see, in FTX collapse, Solana, the decrease in Solana funding rate was even more dramatic, and that's not surprising actually, because Solana was the coin related to FTX collapse directly. So let's uh, change again to Bitcoin, and I will now show you how we can look at autocorrelation. Autocorrelation is the correlation of returns, uh, is the correlation of time series to its past values. So how we can interpret this chart? For example, the after the the daily return is very highly more than about 80% correlated to the yesterday's return. For example, if we come here, let's say 15th days return, so the daily return, the 15th days return is about 30% correlated to the return about 2 weeks ago. This is how it this is what it means. And you see all auto correlations within 30 days are positive, which means that there is funding rates are sticky. So I tested here a strategy called dirty carry. What dirty carry means? At some period, we look at funding rates and select the coins with three coins with the highest funding rate and three coins with the lowest funding rates. We shot those we shot those with the highest rate because these are the coins where long traders pay shorts, and we go long the coins with the lowest funding rates because here players pay longs. So this is a funding rate arbitrage. Let's undo it and see how historically it behaved. It calculates. It will take, I think, some time. And now we can visualize data. You think actually the strategy started off pretty spectacularly, but then it fell very badly. I think actually there is a lot to be done. I believe in this strategy, and also take note that here I only look at price movement, but didn't consider funding rate, the impact of funding rates. If we also take into account the PNL from funding rates, so I think actually this is a pretty good strategy. I will uh, I will do it again in the next video, and will show the results. Thank you for watching the video.